Hello guys, this is Moy Bank from Moy Bank's Trading. Today I'll give you a trading strategy which works almost 80% of the time. And if you are sincere about trading, if you really want to make money, I would suggest you to stick to this strategy and follow my channel. I'll post all my trades using this strategy, and you get to know this strategy in and out. If you are new to trading, this will be the best strategy ever to trade. Okay, so what's this strategy? This strategy consists of two trading indicator. As you can see, we are using EMAs. In this case, we're using 200 and 50 EMAs, which is one is the long-term. As you can see, 200 is long-term EMA, another one is 50 is a short-term EMA. So most of the trading system that we use is one would be long-term, one would be short-term. In this case, we are using 200 and 50. So 50 above the 200 gives us a long indication, and 50 below 200 gives us a short indication. So one thing I have to tell you before you trade, or if you jump into trading, that no one knows the direction of a trend. But what we want to know, that if the trend is going up, we speculate that our next move will gonna go up as well, because as you know, the market goes in momentum. So if the momentum is going up, so we would suggest to stick to the momentum. Means if its momentum is up, we are looking for a buy, and if the momentum is down, we are looking to go short. So in this case, we 200. If the 200 is showing us that okay, momentum is going down, and we will be looking for short entry. For entry point, I'm just not going into the entry point yet, but just to give you an overall what do you call the scenario of a trading, that how you're going to look for a buy or sell. So if the 200 is up, if the 50 is above 200, so we are looking for long. So in this case, as you can see, we go for top-down method. Top-down method is a method that we go from the higher time frame to the lower time frame. So we will be executing our trade on 15 minutes time frame, but our long-term trade, long-term time frame would be 4 hours and 1 hour time frame. So in this case, we are looking at the 1 hour time frame, see what happened. So 1 hour time frame, as you can see, we are clearly above 250. As you can see from the 5th of February, we are above. This is USD Japanese yen, by the way, and as you can see, we are from the Monday 5th of February. Today is the 14th, so last 10 days price was above the 200, and 50 was above 200 EMA. So it gives us an indication that we are looking for only long, okay, not looking for short. Okay, so obviously we don't need to look for short entries, we don't need to enter short, or even the market is going down, we are not looking for short. That gives us a very big edge over other traders. So the traders, they don't know what to do, because most of the cases price is going down, they go short, and then in a minute price is going up, they go long, and that's how they lose money. So what you have to do is stick to the wires, that what we're doing. I know there will be big resistance, suppose weekly resistance or daily resistance, you can go short on stuff, that other strategy is. But this strategy, specifically this strategy, if you stick to one strategy, even one single pair, you will be able to make money. I can guarantee you that. Okay, I can guarantee you that you will never lose money if you stick to one trading strategy and one trading pair. And you can do correlated pairs. Right? Suppose if you trade USD Japanese yen, or GBP Japanese yen, or Euro yen, then it's okay. as long as you stick to the yen pair. That means their movement will be very similar. So you can correlate with this Japanese yen, but trade only one pair, not on three pairs. That means that your risk will be threefold. Okay, but if you want to trade USD pair, suppose Euro USD or GBP USD or AUD USD, so stick to the USD pair and don't cross trade. I mean, if you are GBP USD and don't go long on GBP USD and short on USD yen, all this kind of stuff, because if you don't know the correlation, how much correlated they each other, you will be in a downfall, 100% sure. So stick to one thing. So let's move back to the strategy. So we have a uptrend bias. We know that we are going long. Okay, so we are looking for only long setups. So as you can see, and also one thing you have to know, there is many things you have to know. That's what the trading becomes more complicated and people tend to lose money in trading. So what we want to do in trading is that we wanted to get what is so-called discount price. Okay, this is very popular terms nowadays, so I'm using the popular term. It's called discount price. Discount price is, everyone knows what discount price is. I'm not going to teach you the English vocabulary, but you know discount price is meaning your cheaper price, right? So you don't want to buy anything. Suppose in here, as you can see, price is 148.89. So we don't want to buy this if we can buy it at 148.48. Suppose so this will be our almost 89 cent cheaper than we can buy USD against yen. So we want to buy cheaper, but you can say that, okay, if you buy this, you can go lower and you can buy even lower, right? That's fair. But in this case, our long position would be above this 200 EMA. We're not looking to go below and buy 200 EMA. That's our strategy. That's why we're not looking to buy below this strategy. If you want to buy below this, that's another strategy. That's called mean reversion strategy. I'm not going to this. So, but we are looking into this strategy. This strategy is one of the best strategy in my arsenal. So I'm teaching you now. But what are you looking for? We are looking for price to come back to this 200 EMA. Okay, that's our main theme. So why are we looking for the price to come back to 250 EMA? Is that if look at this one, what happened here? So if the price is up too much above 50 and 200 EMA, what will happen? The price will gonna come back to the it called mean value. Price is we're gonna come back to the mean value. Means price is overpriced, so the market makers will gonna bring the price down to its normal average value. So you can ask why the price went up for a sudden. So this went up because of the news event. You can see that it's a big spike. So this is this price hike happened because of the news event, right? So after the news event happened, the market makers and the whole investors, they come up to this level that, okay, this price is overvalued, 150, no way. Okay, so they will try to push this price down to this mean value. So what was the price was 148. So as you can see, price eventually gonna go down and around this area where the price is supposed to be. That's called the mean value. So that's why we are not buying on this area, because we know price will gonna drop. As you can say that, why don't you want to short? Because if you know the price is going to go down, why don't you want to short? This is not our strategy. Our strategy is to buy when the EMS price is above the EMS. So we're looking only for buy, and the buy is the setup that we're looking for. Price need to be close to 200 or 50 EMA on 15 minutes time frame. And now you see this is 1 hour time frame, right? So now we're gonna go. So we know this is one condition met, that we are above 250 on 1 hour time frame. Let's move back to the 15 minute time frame, then you see what happened. Okay, now we are on 15 minutes time frame. What is it? Let's delete this one for a time being. And so in this case, what happened is that price were above what? 250 and 50 EMA above in 1 hour time frame. So when price is coming on 15 minutes time frame, it look like that we are below 200 EMA, below 50 EMA. So how are you going to enter the trade? We'll be entering a trade in this case when price move back above 50 and move back above 200. So in this case, you can see that price went above 200, but price 250 is still below 200. So this is not our buy entry. In this case, still price is above 200, but price is 250 is below 200. Now what do you see here? As you can see, price is slowly crossing above 50, is crossing above 200. So look where the price crossed above this, in this area, right? And look what happened here. This one thing I will show you. If you sorry, excuse me, that's our area of resistance. So our resistance is broken around this area. Also the 50 crossed above 200 EMA. So you can ask me why you have to enter around this area, not anticipating on buying on the support. If you know trading, so you can tell that okay, we could enter here because this is our support, and in 1 hour time frame we are on we are above 250 EMA. So why don't you want to enter here? You could enter here, but for a beginner trader, I would ask you use this simple method, and then once you are expert in trading, you can execute in different way. So this will be the best entry for a beginner traders when price break above this, and this gives you a nice risk and reward ratio as well. So our stop loss will be below this, and when the price will close above this, we straight away we created this area of support. So this will give us a strong entry point. What's the strong entry point and weak entry point, you have to know. So if you don't know what is strong and weak entry point is, I'll tell you in briefly. If you trade with me, I'll give you the whole detail of the weak and strong entry point. Strong entry point will gives you a smaller stop loss. It means that if you enter here, your stop loss will be very small, and you can say that okay, small stop loss doesn't work, and why you have to do the small stuff. I see the lots of argument behind this, but if you have a stop, if you know where to enter a trade where it gives you a small stop loss, and if the small stop loss invalidate the trade, that means you're out. You don't need to go for thinking again and again. If it goes back again above this support, then you can re-enter your trade, but you will be losing only small amount, other than losing a big chunk of your position. I know you can reduce your position by taking smaller lot size and all this thing, but still as a trader, if you want to make a decent amount of money, your lot size need to be decent. So in this case, if you enter around this area, stop loss around your lot size will be decent, and you can make I can tell you that this one, if your entry is, so your risk and reward almost, as you can see, our risk and reward ratio is amount to 75 pips and 173 pips. Okay, so this will be the perfect entry. If you follow my strategy, I can guarantee you that you will gonna make money most of the time. Okay, so let's look at one more setups. Okay, so we are in this area, as you can see, we are not looking. What are we looking for? We are looking for price to, in this area, what happened? Price is below 50, so we're not looking for long. In this, still price is looking below 50. Now in here, price dropped below 200, so we're not looking for long or short either. So we are neutral. As soon as price move back above 50 and 200, we are looking for a long entry. And as you can see, what are we looking for as well? We are looking for a support or resistance lines to break. So this is our resistance, right? If you know how to draw a resistance line, this you'll know that straight away. This is your resistance line, as you can see clearly. So we are close above this. This is our entry because of the resistance broken, and our stop loss will be in here. As you can see, it's very small, and your target could be up to this high. Okay, so this will be your long entry from here, and target would be around this area. Okay, so thank you guys. If you have any question, please let me know. Bye.